My name is Alphonso Esposito with Fierce Trading, and this is our second time speaking at this online conference. The last time we got invited, my business partner, Fabio Spinella, gave a talk, and so this time we decided that I would come on and give a talk, so I'm really looking forward to it. So my outcome for the next 45 minutes is to give you guys really good information on how to trade to get paid, and I'm going to be talking specifically about the 30-minute time frame. And so that's really my most outcome, because you can always make money, but I can't really give you back your time. So I do value the 45 minutes that you've set aside to listen to me. I'm going to make sure that I give you my all and give you guys and ladies lots of value. So let's just get to it, okay? So as with, of course, I'm just looking to see, there it is, okay. As of course with any investment talk, I wanted to just give you the brief disclaimer for you to look at for a second. Of course, trading involves risk. You could lose money, you could lose all your money. You have to be smart, protect yourself. And of course, everything that I'm going to be teaching is of course educational. So just be, obviously be smart about your trading. And my guess is that there's probably a lot of either new traders or maybe some traders that are maybe looking for some different or new edge, or maybe even some struggling traders. So I think wherever you are in your trading, you should get some good value from today's talk. And what I'm mostly going to do is I'm going to be breaking down how to trade to get paid using the 30-minute chart intraday in a very easy to understand format. I'm going to use some charts, and I'm going to use some really easy content to follow. And so I really want to make this about getting all of you really up to speed to be able to trade 30-minute charts as early as tomorrow. So this is not really about me. I'm not going to tell you how great I am and all of that stuff, because nobody really cares. What you do care about is learning something new, something that has an edge, and something that can help you actually make money. And so that's what I am going to do. And so the talk is called Trade to Get Paid, and let's get to it. So what's the outcome for the next 45 minutes or so? This is going to be a practical guide to transform your intraday day trading into a paid job using the 30-minute chart. Now, don't get me wrong. I use other time frames intraday. I mean, I do all of my trade setup and analysis using multiple time frame analysis. And early in the morning, when there is something that matches my job description, I will take trades off the 1 or 2 minute chart. But this particular talk is for a trade setup that I really like to use later in the morning. And on the days that I trade in the afternoon, I love to be on the 30-minute time frame for lots of reasons that I'm going to explain to you today. And I'm going to show you exactly how we trade them day in and day out, including even one that we took as early as late morning. So let's get to it, the 30-minute trade. So it's a high-quality intra-trade setup that allows a trader to capture profitable trades in a more relaxed, bigger intraday time frame rather than a stressful micro time frame. So I don't know about you, like this morning I actually took a trade on Delta Airlines, and it was a really nice significant gap, and I was able to drill down even to a 15-second chart and take it almost out of the gate. Now, I don't do that very often, and when I did, I was stressed. Like I could feel it, like, oh my goodness, like, because everything is happening so quick. There's so much whippiness and choppiness that can occur in those first couple of minutes and in the first 15 minutes or so of the market. But the bigger time frames, the 30-minute, the 60-minute, these are ones where you have plenty of time to really kind of set your trade up, and you don't have to be so stressed. And there is, though, however, probably some of you might be thinking, well, when you're on these bigger time frames, you're going to have these really wide stops. And I'm really going to debunk that myth today, because on average, even on a 30-minute time frame, the maximum stop that I take would be 25 cents. And I would say that over 90% of the trades have less than a 20-cent stop. So you can still be on a bigger time frame, like the 30-minute time frame, and still get really great stops with really great risk to reward ratio. So before I get into the actual content, what I thought I would do is just show you just one visual of a chart of kind of what I look like. So in case there are really any complete newbies that you'll understand what I mean by a 30-minute chart. So here is a 30-minute time frame chart. And you can see this is the first candle of that particular day. And you can see that it had this big rundown here in the morning, and then gave this nice 4-bar retracement right back to the same area where it really kind of fallen apart in the morning. And so, and I'm going to walk you through exactly the steps that I use to find these and how to trade these, the whole thing. I just wanted to give you a visual to start. It does this nice 4-bar retracement right back to the morning supply area, gives a nice little reversal pattern, and gives us an opportunity to set up a trade to see if this trade will potentially go lower. And so that's an example of it. This is how the actual trade played out. So there it is. Of course, when we take the trade, I don't know that this is going to be as profitable as it ended up being, but you know, it matched all of the principles in the job description that I'm going to walk you through today. And by the way, this stock, even though this trade, even though it was a $26 stock taken on a 30-minute time frame, had less than a 5-cent stop. So again, you're going to see that you can trade comfortably on high-quality trade setups on a bigger time frame, and kind of sometimes stay away from those smaller time frames, especially as the day progresses, where you know you can get whipped around a lot in those smaller time frames. Okay, so what will we cover in this class? I'm going to first talk about who might be best suited for the 30-minute trade, how to locate these trades, how to choose the best one or ones, you know, a couple of them, and then how to effectively trade them. And then I'm going to take everything that I've taught in those 4 bullet points, and I'm going to give you kind of a chart review on some recent trades, so you can kind of take what you've learned and what I've taught and actually see it visually on a chart. How does that sound? Awesome. Okay, good. So let's get to it. Who's this best suited for? Well, a trader that obviously wants to buy a stock at prior price demand or short a stock at prior price supply. Now that would probably be the same for any time frame in which you're taking, but you know, for purposes of this, we're focusing on the 30-minute. Also, somebody that maybe prefers to trade on a bigger time frame. So, you know, I've been trading for 8 years full time. I'm now 48, so for me, you know, I like to be on the bigger time frame. Not, I've just gotten more comfortable trading less and making more by being on a bigger time frame. And so maybe you're not super fast with your order entry, or maybe you find that you get whipped around too much, you're too nervous or too stressed on those 1 or 2 minute time frames. So, you know, going out to a 30-minute time frame might suit you really nicely. Somebody who wants high quality setups with really simple defined entries and targets. And I'm going to speak a little bit about this later on in the presentation and show you exactly how we trade these in the exact setups and entries, so that you can kind of go ahead and duplicate it starting, and like I said, as early as tomorrow, maybe even this afternoon if you find one. Somebody that wants clean charts free of most indicators. So there's some people in here that I recognize from prior teachings, or you know, prior clients or students and what have you. So thank you for attending. I do appreciate that. Good to see you all. And many of those folks know that I'm not really a big indicator person. The only 3 things that I use on my charts are the actual candles, volume, and then volume weighted average price, or VWAP. I don't use any other indicators at all. No moving averages, no Bollinger Bands, no oscillators, none of that stuff. Because what's most important, the only thing that's really a leading indicator and that can actually give me the most up-to-date information, is price. And those 3 things help me find trades at those prior demand levels, prior supply levels, and really make it simple and kind of keeps your charts clutter-free, not lots of lines and things that can kind of mess you up. Or the other thing too is that a lot of times with indicators is that somebody has a particular bias about a stock, like they're just committed to being right that this stock's going to go higher or lower, and so they will use, you know, a whole bunch of indicators until 1 or 2 of them kind of confirm their bias. And really, it's better to do it the other way, which is to just have a really clean, specific job description and just wait for that to show up on a chart, and then just use the power of probability over a series of trades to take those trades confidently. So we'll talk a little bit more about that in a moment. And then wants to trade less and make more. I'd say I average about 2 trades a day. That's plenty. That's usually all I need to make my daily income goal. Typically only trade one symbol, at most two. I used to trade, 8 symbols a day and take 16 trades, and don't have to do that when you're on a bigger time frame. So let's talk about how to locate them, because I always get that. It's like, okay, great, like I understand it, when I get to the part about how to trade them, but how do I find these? Well, there's just very specific ways in which we find these at Fierce Trading in the morning. The first is we look at the top 2 to 3 prospects that we've identified in the pre-market. And mostly what we're looking for in the pre-market are a couple of things. First and foremost are any type of significant gap, especially when it's during earnings season. So, there's no official start to earnings season, but most of the earnings for the fourth quarter are going to start, or for the next earnings season, going to start this week. And so the next 6 weeks are going to be really busy, lots of great significant gaps that are going to provide lots of great trading opportunities on all time frames, but especially on the 30-minute time frame. And so obviously I'm not going to have enough time today to get into the criteria of what we would consider a significant gap, but I do think that when you get to the charts, when I get to the charts, you'll kind of get a visual flare of what that might look like. But any type of significant gap that we identify pre-market is for sure likely going to make one of our top 2 to 3 prospects. Now, if there are no really great significant gaps, usually during off season, or there's just, some things about the gaps that just don't make it all that attractive to us, then we'll look for things that were in play the prior trading day. So something that might have had just some unusual moves, some news event that really caused the stock to have some big significant move. And so understanding how big institutions have to trade, they're not able to just buy and sell all in the same day. It takes them a while to build and accumulate their position that they're going to hold and trade for a little bit of time. So knowing that, we can actually take stocks that were in play the prior trading day and find really great trading opportunities with those as well. And I'm going to show you an example of that later. Also, you can invest in a high quality intraday scanner. Now, Fabio, my business partner and friend, he has a scanner that he's put together some proprietary scans that he hunts for certain things that match our job description. And so that's another way that you can do it. They're usually fairly inexpensive. Typically, half of a winning trade covers, an entire quarter of the cost of a good scanner. So that's another great way to find high quality 30-minute trades. Fabio likes to call it his assistants. And then narrow that list down to 2, maybe 4 stocks. I like to just try to focus in on 2 because I want to be where the big money is, where the most action is in the pre-market, because those are the stocks that are likely going to be most looked at by most people and where the big institutions are trading. And so as an intraday trader, I'm just looking to capture just a small portion of that move. And so I want to be where the big money is, and I can just kind of lasso my little trade onto it and get tugged along for some nice profits. And so the fewer stocks that you look at during the day, the much less stressed you'll be, and you'll find really good high quality trade setups. So those are the ways that we look to find them. Now, how to choose the best ones to trade? Well, the first thing is that you need to have a clearly defined job description of what your particular trade setup, in this case, the 30-minute trade criteria, entails. So some of you may look and say, oh my goodness, like a job, like that's why I got into trading, because I don't want a job. I'm planning to make a ton of money so I don't have to work for somebody else. Well, that's obviously a great outcome. And, thankfully I haven't worked for anybody for 10 years except myself, but I do actually have a job and I do have a boss, and my boss is me and also my job description. So it's naive to think that the stock market is not random. It is. And so most struggling traders trade randomly without a defined job description, and thus they get inconsistent results. So the best way to trade something as random as a stock market is to really have a specific job description, because that keeps you with the power of probability and helps you clearly define your edge. And so if you have a negative little view or connotation for the word job, maybe you just change that little mindset framework and just look at it as something that's going to actually help you be consistently profitable. You don't want to trade random in a random market for sure. And then you want to write it out. You want to write out your job description for each trade setup that you may have. And so today, I'm going to help you write out one for the 30-minute trade that's real simple, but you want to make sure that it's tight, it's easy to understand, that you could show it to a 10-year-old and they could follow it. You know, it doesn't have to be complicated. Sometimes as traders, people want to make things complicated because it's like a challenge or it boosts up their ego. When really at the end of the day, all we're trying to do is make money, to make consistent income. And so make your job description simple, make it tight, make it easy, but it also must be clearly defined. The clearer the description, the better the results that you'll get. So at Fierce Trading, you know, we do have this live trading room that we operate in the morning, and a couple of other services that we do at noontime, and then a swing trader alert service. But we kind of base everything that we do on this, what we call this Fierce Trading mantra. And I kind of got it from somebody that I really kind of respect, as I never met him, except that I just watch him on the Shark Tank, Mr. Wonderful. And he always says that he's a disciplined financial investor, and that you know, he's always weighing every investment that he makes as to what his potential reward is versus his risk. And that's kind of the same kind of mindset that we want to have as traders. So we have this very simple trading mantra. The first is that we're extremely focused. You want to be, as a trader, you want to know exactly what your outcome is. I mean, if you're a day trader, exactly how much money do you want to make by the end of the day, or by the end of the morning, or whatever the time frame is in which you're trading. And then, do you have a job description that helps you move towards your outcome? I mean, I've seen people that come to me and say, I want to make $10,000 a month. They've never made $500 a month, and they don't have a job description to help them move towards their $10,000 goal. And they're wondering why they're just doing the same things and not getting any different types of results. Next is being patient. So hard, especially as a day trader, to be patient. But patience is that ability to wait for your job description to show up. Not to try to take a chart and analyze it into a trade, but just kind of wait for the one that you know has an edge, just strategy that you have that has an edge. And I'm going to get into this in a moment with the 30-minute one. You may have other strategies though. Wait for that to show up. Just be patient. And then you got to be disciplined. You have to have the correct and proper mindset to take the trade when it appears. And so that needs to involve overcoming, like, well, what if the trade doesn't work? What if I lose money? What if it doesn't go in my direction? I mean, those are all logical, relevant fears, but the truth of the matter is that any trade that we take, no matter how much it matches our job description, or no matter how much we believe it's going to go in our intended direction, may not. And that's just the reality of the stock market. And so if you have a really clear outcome and a clear job description, and you're patient to wait for it to show up on the chart, then you just need to have the next step, which is the mindset to say, I have to take this trade when it appears. And then you have to have action. You have to execute the trade and then be focused and present while the trade is open, and then be able to end the trade, either sell it at your intended targets or stop yourself out if it doesn't work, or some combination of the two where you're trailing yourself to limit your loss as you're in the trade. Okay? And so that's kind of our Fierce Trading mantra: focus, patient, discipline, and action. So let's get into the actual job description. Now, anytime I write a strategy, and I don't have many anymore, I used to have a whole lot, but now I just have a couple, and I just keep repeating them over and over and over again. It's just much easier and doesn't take up as much brain power for me. So anytime, though, I write some type of strategy for a trade, I kind of break it into three parts. The first part is what must the chart have present? So instead of me trying to analyze the chart to death to see if it might confirm my bias as to what direction I think the stock is going to go, I just have certain things that the chart must have present in order for me to even consider to look at it any further. The next is, what are the criteria for your trade entry? And I'm going to get into these when I get to the charts, but these are just some things that, and I believe you're going to get a copy of this so you can go back and start to construct your own for whatever strategy you choose to trade. And then lastly is how you're going to manage each trade. So kind of the three parts of a job description. what must be present on the chart, what are your criteria for your trade entry, and then how will you manage each trade. All three of them are equally important. By the way, if you have any questions, you can start typing them in if you want, so that when we get to the question and answers, some of them will already be there. If you don't, that's totally fine as well. Okay, so let's break it down first. Part one is, what must the chart have present? Now, these are certain things that Fabio and I like to have, and many of the other fierce traders that trade with us, but that doesn't mean that you have to have the exact ones, or you don't have little different changes to them. I'm just sharing with you what's worked for me year in and year out, day in and day out. And of course, I'm not saying that these are the only job things that must be present on your chart. So for me though, except for rare exceptions, like during earnings season when there's some really significant gap on a stock that trades typically less than 1 million shares, for the most part, I want stocks that have consistent volume on the daily chart that trade over 1 million shares. And my last point on this slide will kind of confirm why that is the case. But there are a few exceptions, during earnings season. But for the most part, I want to be trading stocks where other people are trading. You have to have a price range that matches your description. So for me, I don't like to trade anything less than $10. I just find that, except for rare exceptions, those are not usually looked at as much by the big institutions, and I want to be trading with them. And I really can't much exceed $150 because the minimum trade size that I take is 1,000. Most of the time it's 2,000 or 3,000, and so I just don't like to tie up that much money in my retail trading account to have 500,000 in buying power. So I have to kind of limit how much what stocks I can buy, and so $150 to $10 is usually my kind of sweet spot. And then I want to have stocks that have some type of trading range to them. I don't want to trade stocks that have traded 10 cents on average a day, because I want to make money. I want to actually take a trade that can move for me and make me money. And so 75 cents seems to be a pretty good number that I've found over the years. Now, again, there are a few exceptions to that. Again, if it's a really significant gap, typically on a really good earnings gap, a stock can exceed its average true range 2 or 3 times. So there are a few exceptions, but the general rule is 75 cents. And then the bid-ask spread. So I want that to be no less than or no greater than 4 cents between the bid and the ask. Because again, I'm not interested in trading a stock that has a 35-cent spread and, and then I have to try to maneuver, limit orders, or, I buy the ask and I have 3,000 shares and I'm immediately, if I have to sell and hit the bid, I've lost 35 cents per share. So the tighter the spread, the better. And that's why I typically find stocks that have less than 1 million shares, have really erratic spreads and make it a little bit more difficult to trade size. All right, part two. What are the trade entry criteria? So Fabio always says it best that, if it's not at a location, in quotations, which is really prior price demand or prior price supply, then there is no trade. So in other words, we don't want to trade in no man's land. We want to trade where buyers had bought before and where sellers had sold before. And so we really must be at a really great location. Also, we want to have fluid pullbacks or a fluid retracement. Ideally, 2 candles, 3 or more, even better. And what I mean by fluid is not a lot of crisscrossing candles, not green and red and green and red, but a nice 3 red candle pullback or more, so that when I'm taking a trade long in that instance, that the path higher is going to be a heck of a lot easier, because there are not buyers on that pullback that are trapped, that need to get out and stall the move. So the more fluid the pullback, the better. And I'll show you some examples of that here in a moment. And then some type of reversal candle or a pattern at that location. And again, I'm going to show you some specific examples of that so you can see what I'm talking about there. All right, so let's continue. And then lastly, in this part, you want to make sure that you have a good risk to reward ratio. You obviously don't want to risk $500 on a trade to make 200. I mean, I could go to my 9-year-old daughter and explain that that's my philosophy, and she would probably be not very happy with me, because she might think that her financial future as a child is in jeopardy if I'm risking 500 to make 200. So, you know, we want to make sure that if we're risking $500 on a trade, that we have the ability, or at least at least the opportunity. That doesn't mean that we're going to make it every single time for sure, but we want to have at least the opportunity to make at least twice what we're risking. Otherwise, it wouldn't make a whole lot of sense to take the trade, and I would rule it out. Okay, so let's just get to the charts here for a few moments, and we're going to come back to the trade management part. Okay, does that sound good? I know that everyone as a trader is visual, and I don't know a non-visual trader when we're staring at charts. So I would say that everybody is, for the most part, visual, and charts usually satisfy that need. Okay, so here was a trade from last week. I believe it was Friday. You can just go look it up. It's Celgene. I gave you the symbol. I believe this was Friday. Now this had a fairly, what we refer to as fierce trading, as a significant gap. And for sure there was some potential based on the gap to play it in the morning as a short. However, Celgene can be awful spready and volatile first thing in the morning. And so I knew it was not going to meet my criteria for, you know, what I refer to as a fast or sneaky entry on a very small time frame. So I had to be patient and just wait for Celgene to come into a location where all of the people that were trapped from the gap would no longer be trapped, and then I can just hunt for a bigger time frame off the 30-minute chart entry to play it as a reversal trade. And so, you know, I kind of marked the area, and it's not always an exact price, but it's an area where we had prior resistance that became new support, and also it had demand. So once it crisscrossed over the 139 area, it ran all the way up to 146. And so this gap, this morning sell-off, is just allowing all of these traders that bought way up in here as their opportunity to get out. But as it comes back down into this area, there's going to be less and less traders that would be shorting there. They're going to start covering their position, and then there's going to be some people that are going to take it long at this support and demand area. So that's what we were looking to do. And you can see over here on the 30-minute chart, we just kind of waited patiently, and it came down into this area, multi-trade, nice 3-bar pullback right there. And then I started to do that little bit of the rounded bottom, which my business partner Fabio is his kind of favorite pattern. It starts to show where sellers are no longer there. And you can see we had the green, and then the red, and then the red couldn't go any lower. The green, the buyers came back in and then tried to go lower and close with this nice little inside body red candle. And so how we enter trades is we always have an if then. If this happens, then we'll enter in. So what we said was that if this next candle opens up inside this candle and starts to trade higher and engulf this red, we'll go in 1 penny above the open of the candle, and we'll just use the entry candle as the stop. So we don't have to have some, you know, ridiculous stop. If this thing is going to do its turn, it's going to be a moment in time to do it right there at that support area. And so here it was. Here's what it looked like on the 30-minute chart. So the if then, so we didn't know this was going to happen until it did. So if it opened up inside the candle, it started to immediately trade green. So now all of these people in here are going to be trapped. They're going to immediately have to cover. There's going to be some new longs that are going to come in. Took the trade 1 penny above the green, and we just used the entry candle. So that only gave us a 25-cent stop on a $139 stock, and we traded it right up into volume weighted average price, and then a piece into 140. So we had the entry on this was 139. Oh, it was 138.85, and it ran almost up to 140. So it's like an 80-cent move on just that 25-cent stop. So a nice 3-to-1 risk to reward ratio. Okay. Now I said earlier that when stocks are in play, you can keep them on your radar for the following day. Well, this was the trade for the Celgene on that day. I just showed it to you. That was the move. The next day, it just did this nice multi-bar pullback right to the same exact area. In fact, the trigger the day before was right here. I'll draw that line out, basically entering at the same exact entry candle stop, and had a nice little move on the following day, buying at a really great location. Okay. Next one real quick. This was actually yesterday. This was on CVS. Now, this one was not a gap. This one had come up on Fabio's scanner. It was a multi-week pullback, and you can see it was in its second fairly sizable red week coming into a really strong demand area, at least in this moment in time, where support where there was also demand at that area. So as it comes into this area, there's going to be less and less sellers, less and less short traders. They're going to start to cover. And then there's going to be some new novice short traders that are going to come in that, like to short lower the day breakdowns after it's moved, $3. And so this one was just a nice, really easy one. It came multi-bar move down, gave the one green candle that gave us some information that there was some buyers there. And then it gave the failed breakdown, and then it got bought right back up. So when this happened, candle closed. I said, if it opens up inside this candle, we'll trigger 1 penny above the red, and we'll use the entry candle as the stop, and we'll trade it. Our target will be into volume weighted average price, which is about 70 cents away. And so this is what happened. And they don't always work this way, but when you trade a particular pattern that has an edge, and you're really good at picking these locations of supply and demand, you get nice, easy trades. There it was. There's the entry. If it opens up inside the candle and starts to engulf it, 1 penny entry, use the inch candle as the stop. This was a 10-cent stop on a $74 stock, and it ran right to volume weighted average price for a 70-cent move on a 10-cent stop. Just look at a couple more, and then I want to get into the trade management and then button it up for some questions. Yesterday was also MTD, and this was a stock that had a really great significant gap. In fact, Fabio played a 1-minute trade on it in here at 78 and had a really nice move on it. And then I was picking up my daughter at that point, so I was not able to trade until later in the morning. I came back. Fabio told me that MTD was in play. I saw that it had done this big 3-candle rundown, and I saw that it was coming into an area of prior support with demand. And I knew that there would be less and less people that would be trapped from the gap at this point, and that no really intelligent trader at this point would be looking to short it down here. And so I said, if the next candle opens up inside this candle and starts to engulf it, it triggers 1 penny above the open, we'll go long with an entry candle low stop, and we'll manage it according to our plan. And there was the trade right there. If this had just one little extra thing that I'm not going to spend much time on, but it actually turned red to green. So it started red and then went green, even better, because now you got people in the very short term that are trapped. Entered, stopped, and this thing ran all the way up, and our target was that candle right there. And so that was a nice little trade. And then this stock, when you have a stock that's in play, what's beautiful about it is that they give multiple entries. And so as it came up and I exited out, I saw that, and I remembered that Fabio had traded it here at $78. And the last time it was at $78, it fell all the way down to $76.60. And so it came all the way up, exited out of the trade, and then it gave this. Oh my, hello. And able to take that trade with an entry candle stop and trade it back down again. So again, 30-minute time frame, right back in the morning supply. There was the move, 90-cent move on a 25-cent stop, okay? And this was one this morning. I don't have time, but this was on Walmart. This was a trade that we played right there above that 30-minute red candle, and had an 80-cent move on a 10-cent stop. Don't have time to get to that one. You can look at it, though, on the slides when you get them. So lastly was trade management. How do you manage each trade? Well, first, you have to believe that every trade you will take will not work. I know that sounds negative, but I don't count profits. I'm first protecting the money that I already have. So I make sure that I have stop in place, and if I were to lose on the full stop, that it's an amount that I'm comfortable with, and it's always the same amount for each trade. So I'm just becoming a risk manager first and foremost. And then you have to decide on your income goals. So I have a daily goal to make $1,000 a day. Don't always make it, but I have a job description that helps me move towards that every single day rather than move away from it. And then you want to identify target areas and then manage the trade on the time frame in which you took the trade. Of course, until you get to 80 or 90% of your target, then you want to drill down into a smaller time frame so that you're not giving back 60 cents of a 30-minute candle in an effort to make 10 more cents. I mean, that would make no sense. So as you get really closer to your big target, you can start drilling down into a smaller time frame from which you took the trade. So as a general rule, you should treat each trade the same and manage them the same. So in other words, take the randomness out of even your trade management. Otherwise, you'll just manage each trade however you did on the previous trade. If you had a big winner, you won't want to take your next trade at your intended target, hoping that it's going to pay you big again, and then you'll end up potentially losing really big. And the next trade, you'll be fearful that you don't want to lose really big, so you'll cut your profits short and you end up becoming like a yo-yo or a rat in a hamster wheel. So it's just much easier to just be consistent on every trade that you take. And then you want to make sure that you devise a plan to let you stay in part of the trade to target while you're ensuring you get paid along the way. So if you take really good statistics and pictures of your trades and you go back and you look at all of your trades, you'll find certain things. Like I know that the majority of my trades go 30 cents for me in my favor right away. And I know that when I take trades on the 30-minute time frame, my batting average is over 85%. So I feel pretty confident that I can take a good size amount of shares and exit out of half of the shares at that 25 to 30 cents. It's kind of like taking the air out of the tire. It's like, yeah, locking in a quick $250 or $300, and then you've gotten kind of the weight off your shoulders, you've gotten some profit, and then you can let that rest of the trade go for the bigger target. And of course, you want to make sure that as the trade starts to go in your favor, that you don't turn it into a losing trade. So you want to have specific ways to do it. We have a whole discussion that we talk about every day in the room on trade management. That's kind of the things that you want to be thinking about as you're doing it. Okay. And then the final thoughts on trade management: there's no right or wrong way to manage a trade. There's only a consistent way. So if you truly believe in probability, if you take a series of trades with the same edge and you manage them the same way, I promise you that over 20 trades you'll be profitable. The only way that you won't is if you mess it up and become random in the trade sample. So just trade consistently all the time, and over 20 trades you'll be profitable. You know, unless you're not, but you really should. Okay, so before we get to the question and answers, and I already see a couple typed in, just want to quickly go over. They asked us to at least offer something to people. So, you know, if you're a struggling trader, you can continue down the same path you're on. If you're a new trader, you can try to hopefully get it right from the beginning and not spend, you know, the typical year of pain that most new traders have. And so hopefully if there's anything that's resonated with you, with my talk or the strategy in which I taught, and if it's not us or Fierce Trading, then any other person that, you know, you listened to today that resonated with you, make sure you reach out to them. For us specifically, Fabio and I have set aside some time that we can talk to you on the phone, and you can apply some of these ideas to your trading starting as early as today or tomorrow. And whatever your challenge has been, whether it's psychological, mental, trade management, you know, understanding gaps, whatever it is, we've seen them, we've struggled with them, we've overcome them, and we can help you do that as well. Now, obviously, this offer wouldn't be for everybody. You know, first off, you need to be committed to to hitting your income goal. I'm not interested in working with somebody that is losing $1,000 a month and wants to continue to lose $1,000 a month. That would be kind of a no-win situation. But if you have a specific goal in mind and you want to get there, we can help you do that. So you can want to obviously schedule a call with us. And you obviously have to be trading or be willing or having the ability to trade with at least a month or so, and a couple of weeks would be great. But, you know, you have to almost have an active trading account. I don't think we'd be able to add much value if you're not at that place yet. And then lastly, you must be coachable. And of course, if you're struggling, be willing to break some of these habits and change your mindset so that you can get on the path to consistent profitability. So if you do want to set a time to speak with Fabio or me, free, you can do that. That's what you go to, fiercetrading.com/win, and sign up, and we'll be happy to schedule that call with you. Okay, so question and answers. I do see one here. It says, how do you know to avoid the pullbacks that don't work? So it's a great question. And what I can tell you is that you can spend the greater part of a decade trying to come up with a way to prevent losing trades from happening, or trying to figure out exactly which trades will work and which trades will not. But it will really be a painful decade. The truth of the matter is that we don't know any trade that we take, you, me, anybody, if the trade is going to work or not. So the best that we can do as traders is to have a really clear job description that has an edge. So for instance, like the 30-minute trade that I discussed here in this webinar has an edge. And so the best that we can do is have rules around your trading strategy, have very specific trade setups, so that when you take that trade, you still don't have no clue whether it's going to work, but you know that over a series of trades taken that you're going to be okay, and then have a management plan in place that keeps that keeps you from having, you know, full losses on your trades and allows you to take profit along the way. Okay. Or how to take the most highly probable pullback. Right. So some of those things that I referred to in here, stocks that are in play, stocks that big institutions are trading that day, stocks that are coming into areas like on that Celgene chart where they already moved from that price the prior day, comes right back into that area on a 5-candle move that looks bearish to everybody else, but, you know, 24 hours earlier the stock went, you know, $1 from that point. And it gives you basically the same entry on a 30-minute pullback. So that gives you a pretty high probability that, you know, that trade would be a pretty good place to buy because you just had bought it the day before. Okay. But that's the best that you can do. You know, there is no, unfortunately, there is no indicator, there is no secret formula to have a foolproof way that trades that you take are not going to work. There just isn't one. But that's okay. You don't actually even need that. You don't actually even need to have anything that sophisticated to trade. You just need to have some simple strategy that provides an edge that you repeat over and over and over again. And I think I provided you one today. So, you know, maybe try looking at those charts and putting together a nice little simple plan for it. Okay. All right. Will there be a recording available? I believe so. I'm not sure how you get it, but I'm sure Renee will make sure that you do that. Do we do one-on-one coaching? We used to do one-on-one coaching. We do not do it anymore. We do a really intense mentorship, which we found to be much more effective. And so if you just go, Fred, to that fiercetrading.com/win, fill that out. Fabio and I will get in contact with you and can talk to you about that. All right. So hopefully I had at least met my primary outcome, which was to make sure that you got value from this time, because, you know, you can go and make another trade right now or tomorrow and make more money, but you can't back the 45 minutes that you so nicely gave to me to try to add impact to your trading. So hopefully I accomplished that.